Hey everybody, Chris Bober here with Team Bober at Nebraska Realty. Thanks for tuning in. We are coming to you live today. We're out of the Nebraska Realty office at 168th and Dodge, and we're going to be live on Facebook, and this video is also going to go on the website and several other social media outlets. But it's been a fast and furious 2018, and record sales, a lot of fast moving real estate, and everything you read about talks about this market is just going crazy. What I want to do today is I'm going to review the first half statistics of 2018 and show you kind of what they mean. We're going to establish a timeline to establish some trends of where the market's going and what it might mean to you. So, of course, today we're going to talk about the first half statistics, and our mission at Team Bober, especially with our blogs and our social media, is to educate and empower our clients to make great real estate decisions. So we're going to give you a lot of information today, and then if you have any more questions, you're going to call us. Okay. All right. Let's look at the stats as they came out by the Omaha Board of Realtors, Omaha Area Board of Realtors. They do such a great job of giving you a visual statistics to say what's happening in the market. This isn't the whole story, but it's a pretty good start, right? All right. As you look at this thing, 2017, 2018. As you can see, there's a couple things that I'm going to show you today that are actually trending in the opposite direction of where we think the market's going. Right? So for the first time in, I would say, 4 years, we have an increase in listings from 1 year to the next. So in the pull date of June 2017, there was 2418 active listings on the market. This year, there's 2474, showing a 2% increase. Now, literally, that has not happened in 4 years. I think it's a sign of a changing market, but there's more houses on the market. We also look at the number of under contract in that month is down almost 10%. So you see this market, the spring market that just takes off like a locomotive, kind of lost some steam going into June. A lot of different factors in there, but as you can see, 10% down in number of contracts in the month of a very busy June is another trend. All right, number of closed units for the year, we are down 2%. All right, not surprising coming off a lot of records. And the interesting thing about this is as these numbers are down, or going in the direction of saying that the market's changing, these numbers here keep going up, right? The number closed is up 5%. So even though the actual number that have sold is down, the volume, the dollar being spent is still going up. So the houses, as you see, the real estate is gaining in a market at a percentage higher than 5%. Okay, that's pretty good. The new sale price and the existing sale price, this is actually the mean price for these, 314, 180 respectively for new construction and for existing, both up 5 and 6% from last year. Okay, now let's dig a little bit deeper into these stats so I can show you what's going on. I actually went back and pulled these statistics myself for the last 5 years, and this is taking them on the same date, which will be June 30th of that year. So the previous 12 months before that is where these come from. All right, 2018, you can see the active listings on the date. Back in 2014, there was almost 4,000 listings active in the market, which these day and age, we have short memory, we couldn't even believe that because we were under 2,000 for most of this year. Okay, so as you can see, this time goes here, and we actually have an increase this year. The number of units closed, we peaked at over 7,000 in 2016 for the current pull date, and we've actually gone down a little bit since then. Right, prices are up, units are down. Volume continues to go up. We still are trending upwards in volume. Average sale price started 5 years ago, $283,000 for new construction and $166,000 for existing, $333,000 and $211,000. That's a huge increase right there. Another statistic that I think is showing a trend and how the market's changing a little bit, average days on market. This is the number of days that it takes the property to get sold. 54 days previously, back in 2014. We got to our low last year at this time at 28. Now we're going up a little bit again. Again, another indication that the market's softening just a little bit. Now, I want to grab onto a couple of these statistics because I think visually you can see where it's changing, right? The active listings on June 30th. So June 30th this year, all the way back to 2014. As you can see back here, there was almost 4,000 listings active. It continues to go down, and all of a sudden, this trend line, if we were to draw a line here, it's pointing up again. So more properties are coming onto the market and aren't selling as fast. They're not selling, there's more there. That means they're not flying off the shelf quite as fast as we think they are. Again, I went up to down this time, number of days on market. Over 50 days on market back just 5 years ago. That's actually a balanced market. Continues to go down, and then all of a sudden, bam, we're starting to head the other direction. We're starting to add more days to our market time. If this is a bell curve, where does this end and how long does it go? You can see a trend line there. Another couple lines here, a great visual. This is the active listings. These are ones that sold. And as you see over time, more of them sold, more of them were available. The same amount sold, less of them were available. It went down, goes up a little bit, down. This is the seasonality of the market. The high in like the middle of the late spring, early summer, goes down at the beginning of the year, goes back up, down and up. Now, if you look at this line, it's coming back up and it's trending back up the other way. So the number of properties for sale is going to go back up. I mean, it's just history. These things happen. They're usually symmetrical. We can look at maybe 4 or 5 years of going up again. All right, but it's starting to happen already, as you can see. Average sale price. This isn't a huge thing. It's a slow and steady sale price is this is the one statistic that continues to go up. I don't know if this comes down. It would take a lot to bring average sale price down, but it should maybe flatten off a little bit. All right, another graph and another statistic that I really like is what's called absorption rate. And the market absorption rate is how many months of inventory they have available based upon the speed of the market, okay? As you can see, back in 2014, we had over 7 months of supply in January of 2014. That's considered a pretty balanced market. Statistically, they say about 6 months of inventory is about balanced, so there's no advantage for buyers and sellers. Obviously, you're coming in here, this thing used to be up here, where properties were taking a long time to sell. Buyer's market, buyers have advantage. Keeps going down and down and down, and you look at two months average on the market here this last year, that's definitely a seller's market. As you can see, this thing's not going down anymore, it's leveling up and actually going up again. We're seeing several trend lines that are going the opposite direction that they've been going the last 4 or 5 years. Now, if you look at this thing, we see the problem of lack of inventory within our market. And there's a lot of factors that come into this, but basically they're not building houses fast enough for the demand. And we had about a 4 or 5 year period during the recession when there was almost zero new construction. We still haven't caught up yet, right? So new construction going out there is a problem. We need to build houses to support the markets. Now here's the issue we have. This is a pie chart showing basically how much of the market is going at which price point. This is taken from the last year. So under $100,000, any property sold, they got about, probably a third of the market. $100,000 to $250,000 has over 50% of the market. That's where most of the buyers in the Omaha area are. As you go up, those things get smaller, 250 to 500. That's a small piece of the market. Smaller, over 500,000, and very small, over $1 million, right? So if you think about it, if that's where the demand is for buyers, that's where we should be building houses to be built, right? In that price point, here's the problem. The average new construction price over the last year is $333,000. That's in this thing. Which do you think is more important? This big thing or this little piece right here? But here's what we're building on the houses. Now you see why the prices are going up and the demand is there. Another thing, as you can see right here, as I pointed out, $100,000 to $250,000 is where most of our market is. Yet we are not building houses in that price range. At some point, this will have to be addressed, or else I don't know what the solution is. I don't know how bad it's going to get. But we have to find a way to build houses for people in the market where they're buying. So anyway, that's kind of my plug right there, but we'll see what happens with that. Now in conclusion, and I definitely want to follow up on this because I want to show how at different price points we are experiencing different types of markets. That'll maybe be the next Facebook Live, maybe next week. But inventory and days on market are up for the first time in over 4 years. We just have not seen the average days on market go up or inventory start to build up. It's been a while. Again, I think it's a sign of a change. Finally, units sold are down, prices are still rising because we're not satisfying the demand of the market. While prices are still going up, we aren't building houses to fit the need. That becomes a problem. Low inventory equals record high prices to continue. Again, I don't see how long this can go at the rate we're going because the way houses are going, they're almost unaffordable for most of the market. New construction, as we showed on the previous slide, it's not hitting the right market. So we're not building houses where people need to buy houses. We're building houses above that. I don't know what the solution is, but we're gonna have to find it soon. And at some point, and I'm starting to see it right now, Buyers are just getting tired of how expensive real estate is. If you're a value buyer and you want to go out and compete in the marketplace, it's hard. It's very, very hard. Prices are going up. It's so hard to justify some of the prices people are asking and getting for these houses. We see the buyers start to pull back, which is why market time's increasing, why there's more stuff available. But the conclusion of all this thing is the market is beginning to shift. Again, I don't think we're going to go and fall off the table into a recession, but I can see this going back towards a more balanced market and not being such a great, crazy seller's market, which is actually causing a lot of problems. That's what we're getting to. The market is changing. You need to be prepared for that. What does that mean for you? Well, quite honestly, it differs with each situation. And I always tell people the best time to buy or sell real estate is when they need to buy or sell real estate. The job of the agent is to go out and get you the best deal that the market allows. Not to really predict it, but giving you this information we hope helps make your decision. Hopefully it creates more questions, and when you do have those questions, you want to call us. So remember, if you're looking to buy, sell, build, or invest in the Omaha area, call the pros at Team Bover. We'll tackle the market for you. As you can see, we're trying to stay ahead of this thing. We're not just assuming it's going to keep being great and you can list your house and get 5 offers and sell it in one day. Those days are still here, but they're not going to last that long, and you're going to have a better game plan than just throwing a sign in the yard and hoping it sells. That's what we provide. So if you want more information, you can of course give me a call. My number is 402-312-5076. You can send me a personal email, chris@nebraskarealty.com. I'd love to answer your questions and help prepare you for what's coming up in the real estate market. So once again, thank you so much for tuning in. We really appreciate it. Questions, give us a call. We'd love to help out. So thank you so much. Have a great day.